Alrighty guys, welcome to the weekend video update. My baby is finally asleep and I'm getting 5 minutes to, well hopefully a little more than 5 minutes to do the weekend video. It's been a morning of children and I'm absolutely worn out. I've got my cup of tea and my chocolate in front of me. So now it's time to get into it. Alrighty, so I'm going to start with Eurodollar I think as usual. And I'll just fill you in on what I was talking about the other night regarding a possible alternate account here. And after Friday's action, I think this might even be more relevant. So I'm still tracking 5 waves down, possible complete 5 waves down, marked wave 1 here in brown brackets. So we're talking 1, 2, 3, 4, 5 with an extension in wave 3. Alrighty. Excuse me. From that point, this is where it gets a little bit more complicated. From that point, we've had a corrective rally, and first of all, I was thinking it was going to be a simple zigzag up A, B, and then wave C up to resistance 61.8%. Fibonacci retracement 119.30. That's what I was talking about for the last week or so. And this week, it's kind of it's got a little bit lost in the weeds here, especially on Friday. There we got this nice decline here. Well, a corrective decline again, but a decline off that high, which was not expected. So, given that Friday decline, I'm inclined to think that this could be 3 waves down in an ongoing triangle. So, bear with me here. The alternate account now stands like this: wave 1 down, wave 2 up, wave 3 to the low, and a possible ongoing wave 4 where we have A, B, C, D complete on Friday, and then we get a wave E rally possibly on Monday, or a shallow kind of rise on Monday up to the 118.20 region, and then that will complete a possible wave 4 and then a decline in wave 5. So you'd have wedge, wave 1, wedge pattern, wave 1, wave 2, I think it's probably a flat, wave 3, an extension in wave 3, wave 4, contracting triangle, and wave 5 down, and that would take the wave 1 label here, wave 1 brown. So for Monday, the kind of pivotal point is about 118.20 to 118.50. I don't want to see it for the alternate count to remain a possibility. It shouldn't rise above that high labeled wave A. The current operating count is well, I suppose it's 50-50 at the moment, but it's less likely given that decline on Friday and an almost complete retracement of that previous rise on Thursday. So I'm kind of leaning towards the alternate count here at the moment. So for the first thing I want to do is rule it out, basically. So if we get a rise above the high level wave A there at 118.57 or so, then that will rule out the alternate count. So, but if we get a rise into 118.40 and a further decline, that will pretty much confirm the contracting triangle idea, and we'll get a further decline below support in wave 5 pink. So for Monday, kind of pivotal area to watch is 118.30 to 118.50. So we want to see either the price continue up through that high there and confirm the existing current pattern, which is again just a second wave, or confirm the alternate account. I may have made that I may have, in my explanation, I may have made that more difficult than was necessary. suffice to say, 118.30. Look for that on Monday morning. I'm going to move on here to pound. Excuse me. I'm suffering a bit. Right. So the pound has kind of extended further it's still a corrective decline that has happened all week. Initially, I thought, we did finish our decline around the wave, the low wave labeled wave A there, and it looked like a complete 3 waves decline. From that point, we had a very minor rise and then a full retracement of that rise. And what seems to have happened is a triple combination wave B, so it could not get more complicated. So how that plays out is wave A takes 3 waves, wave B takes 3 waves, and then wave C takes 3 waves. And the rise on Friday it was quite an impulsive rise, so that does point to a kind of a C wave rally beginning, because C waves are usually in 5 waves, so that kind of points to us in the direction of an impulsive rally in wave C beginning on Friday. Obviously, the key low to keep an eye on Monday is we don't want to get a retracement of, let's get in there, that price. We don't want to get a retracement of the Friday low there of 130.85, 130 kind of 130.85 area. So for Monday, I want to see maybe a shallow correction in a possible wave 2, and then a further rally into a wave 3 gray. So we want to see 5 waves complete here over Monday and Tuesday into the resistance there between 50 and 61.8% resistance, and so that leaves us 133.40 for a minimum target, because that's the high of wave A there. So minimum target 133.40, and we want to see the low of wave B hold. So that's what we need to watch out for early next week. Once these second waves are complete in both euro dollar and pound dollar, then you're looking at a kind of an interesting entry point if we can manage to catch it there. If we get a completion of 3 waves up in a nice trend channel and an impulsive decline to a lower high, then you've got a nice tight stop there and a possibility of quite a large decline developing. So that's something to watch out for next week. Alrighty, on to dollar yen. If I can control myself. Let me get a cup of tea there. So dollar yen developed impulsively quicker than I thought it would. I was expecting this pattern here to bring the price lower. I was expecting a kind of an A, B, C decline here into a very slight lower high, but what actually happened was quite bullish instead. We got a completion of a short 3-wave pattern there, and then a bullish impulse wave to the upside in a possible wave 1 pink of wave 1 of 3 of 3. So that would be what's possibly happening here is quite a bullish setup for an extensive rally in dollar yen over the next couple of weeks probably. So what we have here is early next week we should have a completion of a second wave decline in pink here, and then we should start to see a rally, impulsive rally in wave 3 pink, of wave 3 brown, of wave 3 green. So what we've had is wave 1 green up, wave 2 green, and now wave 3 green. So we're looking at entering a wave 3 of 3 of 3 scenario, which should take, it should perk our interest here, because the possibilities for this rally are quite impressive. If we've got a 1-2 pattern, this is the 4-hour chart here. If we've got a 1-2 pattern off the low here, and wave 2 completed there, that means wave 3, here's the first Fibonacci extension of wave 3. We could be talking about 119.95, so a possible 120 for wave 3 green. So that was wave 1 green, wave 2 green, and a possible wave 3 green up into the 119 area. So again, for next week, early next week, you want to keep an eye on a short correction into wave 2 and an impulsive rally, in wave 3, I think. And let's say if we get a break of Friday's high quite quickly, if the price starts to push up above 113.60, let's say, and it's gaining momentum, well then we're probably it's odds on that we're moving into wave 3 of 3 of 3. So that is something to watch out for. Initially, we should get a slight decline in wave 2. So let's move on to stocks. And this one has been obviously the hardest market to call of late. It seems to be extending and extending and extending, but this is where excuse me. Let's say this market is extending at lower and lower degrees here. So I think we're very, very close to the end of this bull market. And further that these wave patterns extend higher, well, it just adds to the pain that will happen most certainly. So that's something to watch out for. If you are invested in this market, I doubt you are at this stage. Okay. So this was kind of the pivotal point here over the last, let's say, week or so. I had been watching the development of this. I was calling it an ending diagonal. So that's how it was developing, and I thought that it was an ending diagonal in wave 5 pink. What happened was we had an ending diagonal, all right, and it was actually just the end of wave 3 pink. So we had wave. I'll just run through the structure so far. So wave 1 up in pink, wave 2, and then 1, 2, 3, 4, 5 in wave 3 pink. And if you look at this wave 5 here, you will see, I'll get rid of those guys, you will see 1, 2, 3, 4, and an ending diagonal, which is 5 internal waves, 1, 2, 3, 4, and 5. So 1, 2, 3, 4, 5. And that completed 5 waves up in wave 3 pink. A very slight shallow correction in wave 4. That was probably an expanding flat. You see a new high there. So very shallow correction in wave 4 pink. And from that point, I can now count waves 1, 2, 3, 4, and 5 in wave 5 pink. And if you look in on Friday there, if you look into the final action here, get rid of those marks. Well, you know that this video is live anyway, that's for sure. I can see 1, 2, 3, 4, 5. I can see 5 waves up. 1, 2, 3, 4, 5. 5 waves up within wave 5 blue of wave 5 pink. And let's get out a bit further. Of wave 5 gray, of wave 5 green, of wave 5 blue, of wave 5 red. So wave 5 of 5 of 5 of 5 of 5 of 5. 6 degrees of trend and closing out. And hence the reason we're getting such kind of extensions, because the degree of this bull market has been so large, and it's taken time. It's just taken its time. It's sweet, merry time to complete. I have a target up here, or a possible target of 23,468. That is given by the Fibonacci extension, 61.8 extension of wave 3 pink into wave 5 pink. So actually, no, that needs to be adjusted again. Forgive me. Doop-a-doop-a-doo. Wave 3 pink. You can throw that up there. Actually, if wave, get the fourth wave. Now, if wave 3 pink equals wave 5 pink, that gives us a target of 23,359. The market stands at around 23,320 or so. Obviously, this is a derivative of the actual cash market, so the closing price here will be slightly different than the actual cash market. So for next week, again, besides the fact that this market has extended higher, I am still looking for initial declines to the downside. I was kind of noting the fact that we had gaps to the bottom, gaps to the downside, and gaps to the upside there during the week, and that's not the kind of behavior that is healthy within a market. It denotes kind of once you start to see air pockets develop, it denotes a real kind of lack of buying interest, and people are just willing to hold and just ride the market higher. And if everybody's willing to hold and nobody's willing to buy, well, that you just eventually hit a point where the bears actually take over, and you just have this kind of downward spiral to the downside then, because then you'll have everybody wanting to get out at the same time and nobody will be willing to buy, so the price just cascades lower and lower. So that's probably what we'll be heading into pretty soon, and that's exactly what happened in 2007 and 2008. From 2007 through to 2009, there was just very little buyers there and everybody wanted to sell, and that's how a market crashes. Right now you have we've hit a point where the buyers have all bought in. I was noting the NYSE data, the New York Stock Exchange data of margin debt that has been taken out by, it's usually retail traders that operate on margin debt. So it's exploded to exponents of the 2007 high, and that is, it's just the wrong thing to do. That these poor fools have been just coaxed in by, you know, a Federal Reserve that just has poked this market higher and just given such fuel to this this rally. You know, free cash, free money to banks. Obviously, what are they going to do? They got to do something with it. They threw it into the market, and everybody chased them in afterwards. And obviously, now we're at the point where the cycle will change to the downside, and all these people are going to get crushed, including the banks that jumped in. So everybody gets crushed. Nobody's going to be spared. I just hope that I won't be one of them. Anyway, for next week, let's get out of the you know, apocalyptic talk for a second. For next week, again, I'm looking for initial breaks to the downside. And I thought we might have had that there with that gap down, but obviously it was just part of this extension upwards. So lower highs and a beginning of, you know, some right-hand shoulders appearing. That's what I want to see eventually over the next couple of months. But initially we'll see a spike lower with a lower high created, and that's what we should be on the lookout for. In gold, again, we're sitting at a kind of a very interesting point in gold. I'm very bullish on gold for the future, for the foreseeable future. Over the next few years, I'm very bullish on gold, and I think buying gold at these levels is not a bad idea at all, and I'll tell you why. The wave count I'm working with is we're now moving into a wave 5 black here. We've wave 4 completed, and we've got wave 1, 2. This is the daily chart, by the way. Wave 1, 2, 1, 2, 1, 2, and sooner rather than later we will see wave 3. So now we are possibly moving back up into wave 3 again, of wave 3 of wave 3 in blue of wave 5. So 3 of 3 of 5 in the long-term count, and this one I have a very good feeling that this one could blow out to new all-time highs above the 18. It was almost 1900. So what do we need to watch? There's a possibility that we now have a short-term 1-2 complete, which has the potential to blow up higher in wave 3. So, oh gosh, really. Let me get rid of that. So let's get back down out of that daily chart and get some perspective. So here we are, wave 1 and 2 in green, and this is what we're concentrating on the short-term chart, this higher low here. Now, have we completed wave 1 and wave 2? And that is what is being suggested by Friday's action. We got quite close to invalidating that short-term impulsive rally here. So we'll see on Monday. We'll know very early on Monday if this low here holds, and we get a break of the previous high of Friday's high there, which was, let me get a price on that for you, about 1290. So if we get an impulsive break of 1290, moving up in wave 3 brown, well then, you know, we're game on. If we get a break of wave 1 brown here, which is again at 1306, that'll kind of give us a confirmation of wave 3, and we may well be away to the races then at that point. So that's what we need to watch for on Monday. Do we get an impulsive break of that 1290 high? So let's move on to our final market, crude oil. All right, crude oil is getting a little bit hairy at the moment. The action off the recent high there, which has been marked wave 2 brown, is just getting very let's say stretched to count it as impulsive to the downside. We still have the possibility that this could be a 3-wave correction to the downside, and given that Friday's rally was quite impulsive, you know, the odds are stacked against the immediately bearish count, but it hasn't been invalidated as yet either. So we still could have wave 1 down, and then expanded flat wave 2, 5 waves down in wave 1, and 3 waves up in wave 2. Now, given that given the fact that this was an impulsive-looking rally, it still counts. It still counts quite well as three-wave structure. So again, Monday's market should give us a little bit of a hint. I'm not sure whether, you know, it'll confirm or deny the existing preferred wave count. Obviously, if we get a break of that 52.60 level, then we'll have to kind of rethink the action off the high. And if we get a break of that 52.88 level, that'll just invalidate the bearish wave count altogether for the moment. If we go to the 4-hour chart or the daily chart, I was introducing this alternate wave count, which is, again, it's a possibility, but you know, it holds about the same probability as the operating count. So I'm neither in favor of this nor against it. Let's put it that way. We may well have a wave A up here, a triangle wave B, which would be A, B, C, D, E, and a wave C on the way. Now this triangle wave B can also be counted. A, B, C, D, E to the recent low. So, we're kind of betwixt and between a rock and a hard place at the moment. The real indication of whether this alternate count is actually correct would be a break of the 5564 level. That's the only way that I will know that the preferred count here is not the actual correct one. For next week, let's get in here, back to the 4-hour chart. Obviously the recent high, 52.88, I think I was telling you. Yeah, 52.88 is the one to watch. It's hard to know what to say about this action off the high recently. If we get a break again below this recent wave B here on Friday, 51.28, if we get an impulsive turn down again below 51.28 and below 50.86, these may not be the exact cash market prices, because obviously I was telling you this is again another derivative product here from IG index. So a break of previous lows will add a whole lot of weight to the bearish count. A break of this recent high here at where is he? Where are you hiding? Yeah, 52.54, let's say. That'll just it's just not what the preferred count wants at the moment. And obviously a break of resistance 52.88 that just invalidates this action, or this labeling here of the recent high. So again, we're kind of in limbo with crude for next week. We cannot I can't throw my hat on either side of this battle that's going on. Long term, oil is going down either way. We'll get a rally up, possibly into the set, even if it is the alternate count of an ABC rally up. We'll get a rally up, into the high 60s, and then it'll be a crash again. Actually, an initial target for that would be probably that 63 level there, that previous wave A. So for next week, we'll kind of work on getting a confirmation of which way we'll follow for the moment. And that is that, my friends. Until Monday evening, I hope you enjoy the rest of your weekend, and have a happy and safe one. God bless. Bye-bye.